Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100 for Sunday, November the 12th, 2023. I'm going to start with a little bit of explanation. I know I left a post on both my channels on YouTube on that I was originally attempting to put this post together and get it put up yesterday, and that I would start with an apology. And I'm still going to start with that apology. And that is that I apologize for not really being super definitive on what my count was, why I based that count and what I based it on, and how it still fits. What I am going to do, and what I did do over the weekend, particularly yesterday, was I spent a great deal of time, first of all, really digging up all the diagonal rules that I could find, particularly those that were put out by Elliott Wave International, which is Robert Prechter, and then also going back and rereading and looking through all of the copies that I have of R.N. Elliott's original work. And while there are mentions of diagonal triangles within that original work, none of them consisted of the rules. So I just want to take a quick review of, as we're looking at things, on what these rules actually are and how I do respect them. And I agree with those that said wave 4 overlaps wave 1, therefore it cannot be a 5-wave decline as I had marked it and still do here on this chart of the ES. So let's just go back and take a look. In an impulse move, which is labeled 1, 2, 3, 4, 5, yes, one of the standing rules is wave 4 cannot overlap the price territory of wave 1. Now, when we travel further down and we look at what the rules are for triangles, and then in particular diagonals, we have to first go all the way through. So on impulse, the rules, wave 4 cannot or never moves beyond the end of wave 1. That's on an impulse move, and it subdivides into 5 waves, and then it goes further, and wave 1 always divides into an impulse or rarely a diagonal. So as soon as it mentions rarely the diagonal, you need to shift down to those rules. Now, just doing a quick review, and these are the ones that are put out by Elliott Wave International. And so I know that Robert Prechter and AJ Frost are kind of ones that are behind all of this and are supportive of it and have done the work in putting it together. So a diagonal is always subdivides into 5 waves. Rule 1, we've met those requirements. And that here we are, 1, 2, 3, 4, 5. An ending diagonal always appears as a wave 5 of an impulse wave or wave C of a zigzag or flat. Okay, so it's not an ending. A leading diagonal always appears as wave 1 of an impulse or wave A of a zigzag. Waves 1, 2, 3, and 4 and 5 of an ending diagonal and waves 2 and 4 of a leading diagonal always subdivide into zigzags. So each one of these is a zigzag. Wave 1, zigzag. Wave 2, zigzag. Wave 3, zigzag. Wave 4, zigzag. Wave 5, zigzag. All of them form zigzag. So that is met. Wave 2 never goes beyond the start of wave 1. Well, there's the start of wave 1. Here's wave 2. Did not go beyond. Wave 3 never goes beyond the end. Wave 3 always goes beyond the end of wave 1. There's the end of wave 1. There's the end of wave 3. Rule met. Wave 4 never moves beyond the end of wave 2. There's the end of wave 4. There's the end of wave 2. We've met it. So that when we're looking through it, and then we're going to go just referring to leading diagonal. In a leading diagonal, wave 5 always ends beyond the end of wave 3. End of wave 5, end of wave 3. Rule met. And then when we're talking here, it also now talks about in a contracting variety, wave 4 is always shorter than wave 2, and wave 5 is always shorter than wave 3. That's in a contracting. And in expanding, wave 4 is always longer than wave 2, and wave 5 is always longer than wave 3. And in an expanding variety, wave 5 always ends beyond the end of wave 3. None of those really applied because this is a diagonal. If anything, it should be contracting. So, guidelines. So remember what it said about in a leading diagonal, which is what we're dealing with. Wave 5 always ends beyond the end of wave 3. So now we have the guidelines, how wave 4 usually ends within the price territory of wave 1. Okay, guideline, not a rule, guideline, and it did. So waves 1, 3, and 5 of a leading diagonal usually subdivide into zigzags, but sometimes appear to be impulse. Well, this actually appears to be an impulse, but it actually, you can count it out as a zigzag. This appears to be an impulse. You can count it out as a zigzag. Same here. So again, it meets the guideline. Within an impulse, if wave 1 is a diagonal, wave 3 is likely to extend. And here it did. There was the extension within the third wave. And so again, we have the contracting, expanding, and contracting. And that in the contracting variety, wave 3 is usually shorter than wave 1. And expanding, wave 3 is usually longer than wave 1. Here it is longer than wave 1. In the S&P, wave 3 is not the shortest wave. But now I'm just going to quickly go over, because I'll go over it in a moment, but it is in the NASDAQ where wave 3 ends up being the shortest wave. Now, there's no mention under the rules or even under the guidelines. But it talks about, how in a contracting, wave 3 is usually shorter than wave 1. And it was. And expanding, this is a contracting. And then in a contracting variety, wave 5 usually ends beyond the end of wave 3. It did, which is, so there is the triangle. I finally did, I drew them, the lines, and it ended beyond, truncated. So again, we have everything kind of meeting within the guidelines and not breaking any of the rules for a diagonal, particularly when it comes to wave 3 being the shortest wave. So based on that, I continue to feel that in the NASDAQ, that it is a leading diagonal triangle. And we'll go over that in a minute. Now I'm going to go back to the S&P, where I continue to consider this to be intermediate wave 1, and not necessarily that it's a contracting, but if we could just continue the line, these are the channel, but also everything fits within. And so I continue to view it as a leading diagonal based on the fact that wave 4 overlapped wave 1 or entered the price territory of wave 1. Everything else in terms of zigzag, 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 4 through the whole setup is all in line. So now here we have, I'm going to start again with the futures market, and then I will do the cash market, where on the cash market, I am showing my alternate views. I know this can continue to just really present a very confusing picture, because now let me add some additional work that I did over the weekend to add to, this rally off of those late October lows has been extremely dynamic, has been, if you look at advanced decline, has been very dynamic. If you look at market breadth, has been even more dynamic, and showing, that the market breadth has been very skewed in terms of does it really fit an intermediate second wave? But if we're looking at characteristics or personalities, on one hand, I can see those that are arguing against it, that it doesn't. But on the other hand, my interpretation many times of a wave two is a sudden reversal in direction. So depending on what direction all this was going, this time the direction is down, that the sudden change produced a very strong up move. I am looking for an ABC. We saw a similar type of move back in May, and I want to go back over to it, where we were here, we were looking for a C wave, and the market just continued to get very kind of cagey, but subdivided all the way. And these were very powerful. The breadth in the market was very powerful, more bullish than anything. And so, but I continued to count it as the C wave and gave the glory to the fact that the third wave subdivided and just continued to subdivide a couple of times. And we did eventually, in July, reached that high, and then got the result of what that move gave us. Now, fast forward, we're back now, and I'll just go back to the 4-hour chart and open it up. Here we are again, in not necessarily, we're actually inside of the A wave. I believe we're inside still the A wave on this intermediate wave 2. And there's two ways I can really look at this. This Friday was incredible. Friday was just like, get out of the way. And that was after the reaction to an abysmal 30-year bond auction on Thursday. And that kind of caught the market by surprise. It took a nosedive, and it actually, in my view, was getting very close to putting in 5 waves down, which would have given me a little bit cleaner view that we likely completed a third and that we're working on a fourth. But I'm marking it because it didn't. I'm marking it as 3, and that it is the fourth, producing Friday's reaction being the 5th wave to complete wave A. Now, I'm leaving some additional room. And the reason that I'm doing that is that I've now counted it out. 1, 2, 3, 4. So if I'm looking for that 5th wave, the fibs that I attach to it are extensions, but wave 5 then compares to wave 1. And the most common comparison is that wave 5 will be equal in length to wave 1. And that number is 44.47. Now, I think that most are kind of going like, wow, the market is, how some are saying, desperately in need of a pullback, not necessarily a turnaround and collapse, but a pullback. And with that in mind, I'm like, but we may still see some additional upside coming out of that expiration on Friday, following through on that intense momentum. We get another little push higher. Now, above the 100%, what comes next? 1.618. And it still could be within this A wave. And that is 45.04. Now, is there a possibility that this whole move could be counted out as an ABC? And my answer is yes, it can. And that would revert to where this is A and B, or I actually can move it down. I know we're on a 4-hour chart and you're looking, but it's so small, but that there are those possibilities. It's not how I'm counting it. I'm giving full bore to the fact that the rally off of that low has been broad-based. It's been very strong. It has shown great advanced decline numbers. It has shown total breadth of the market being extremely more positive, which don't jive necessarily with a corrective wave. But here we are. Now, again, we've seen this previously within a C wave. So that leaves open the potential that what we're seeing is, again, AB, and we're inside the C wave, and possibly that C wave will get us up much higher. Now, what I want to add to this is I'm going to leave those as is, but we're just going to put up the retracements for a wave 2. And that's not going to work. I want to get it on that one. There you go. And we're going to put it there. Okay, so 618 is 4470. So if we're looking for ABC for intermediate wave 2, 4470. We have the next up at 4564. We have additional on this leg, right? Even if we're looking at this being a finishing move, and I'm going to maybe change the not change the direction, but change the extensions, I believe that I still could come up with the same levels. So here we have these levels. Now, there are possibilities that the market is really just going to come in very close to this high at 46.84 and actually exceed it. And that would come under basically our alternate count. So that, yes, there are possibilities that we're going to see a much stronger up move. But under this particular count, which I'm continuing to hold to, based on how I have now researched and am counting this initial leg down, I will present you an alternate count that will show it a little bit differently. And again, bear in mind, zigzag, 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 which doesn't make it 1, 2, 3, 4, 5, makes it ABC. ABC, 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 ABC. That also fits with the alternate count, and I'll show that in a moment. So again, if we're looking at this, what are we looking at for tomorrow? I do believe the market needs to pull back. We did see it start to pull back, but man, it didn't really come off all that much. We're looking like it came off 13 points, 6 points after that bell. We get that extra hour. And so we're not seeing this great move down. And very possibly now what we've seen over the past last Sunday with the start of Globex, we got a gap. We had the market gapped higher and then just held those higher levels. And then that following Monday just roared and then just continued to go and continued to go all week long. So we still have not seen, other than Thursday's reaction to the bond auction, a sizable or just recognizable pullback that we would be able to put in as a B wave. If I'm going to count this as a completion point for wave A up here, then I'm still going to be looking for a B wave. If I was counting this as the completion point of wave A, I would have been looking for a B wave. And on last Thursday, I discussed it. And those levels were much lower. We're looking for a B wave to bring us back down below 4,300 and closer to 4,255 or possibly even a little bit lower. Well, we got 43.54 before the market decided, no, we're still going to blast higher. Now, again, reviewing Friday, it was an expiration. And it just, to try to determine what the motivation was behind that strong push with a lot of commitment again to buying. I believe a lot of it could have been the gamma flows, right? And how the zero DTE options and just the options that were expiring on Friday. And as things moved heavily to the upside, it went through strike prices that forced adjustments in the positions that were expiring on Friday. And in some cases, we slipped and fell and ripped through strike prices quickly. If you consider where we started on Friday, and this would have been 2 a.m. and we're right in here, we started like still below 4,400. And we opened, I want to be here, we opened around like 43.80 and went as low as 43.67. So we went through 43.70, 43.75, 43.80, 43.85. That's 4 strikes. Then it just continued. 43.90, 43.95, 4,400, 4,405, 4,410, 4,415, etc. As it just blasted and continued to push higher. That forces a lot of adjusting. And the drops forced a lot of adjusting. So again, combining all that, to say that the moves are bullish, yeah, it goes without saying, actually. They are extremely bullish. But then I combine to what I see happening in terms of interest rates, which in my view, interest rates still sit at the top of that order. So whatever happens to interest rates rolls downhill, not uphill from a weaker position. Whatever happens to interest rates, because that's what controls the lending or what we got to pay to lend and what we get when we are the lender. So what we receive in terms of interest versus what we have to pay to borrow. So again, this statement about how the bond market is a little bit out of balance with the equity markets is reversed in my mind. It's the equity markets that I believe are just out of touch. But that doesn't mean they won't continue to go up. But it fits in the personality of the wave that I'm counting. And that goes contra to what some others are also, feeling. And I think I need to accept that as well. So with all of that in mind, under my preferred count, I do believe if I'm going to leave it as an 1, 2, 3, 4, 5 for wave A, then the whole process is going to be a zigzag. This ABC for intermediate wave 2 will be a zigzag. And I'd be looking for a B wave to begin at some point here. Now, if I'm counting this as ABC up, and we're looking in the C wave for the completion point of intermediate wave 2, then we're looking at the levels of 44.70, 45.04, 45.64, 45.97. And again, these are higher levels, 2.618, 1.618, and they do not necessarily go unnoticed because the power of this buying may just push them up here. So again, geopolitically and just also politically, we have this very great cloud hanging over the government and the markets. and that is next Friday. They won't be able to get anything passed to fund the government, to fund the money. And if we go again to where the government gets shut down and the United States is once again confronted without being able to meet its obligations, Moody's has already come out and said, hey, you're teetering on your AAA. Right now, the United States of America still has a AAA rating on their bonds. Government issued treasuries are still AAA rated. Moody's is now saying it could be in question because of the problems that we're having within the government, because of the problems of trying to keep the government funded, because of the problems of not being able to come up with a plausible, agreeable budget and pass that budget. So it throws a lot of credibility towards the faith and good credit of the United States. Now, do I believe that that's being thought of as I'm seeing huge amounts of money being poured back into the market? As we see this rally pick up a lot of strength? I don't know. I don't think so. Does that mean that it's not going to happen? No, I don't believe that. Does that mean that the buying will stop? Not necessarily. So again, this is the juncture I believe we sit at. How does one choose to trade that? Well, personally, as I told you many, many times, I am a day trader. I purposely stopped trading positions because I got tired of the volatility. I got tired of the weekly move, the intraday move, all of the move. So I chose to go to be a day trader, leaving me totally open to just do what they're doing for that particular day, make whatever I could, and carry no positions overnight. And that pretty much has been my way. So again, I'm just going to say, I have been able to participate in this intense buying to my favor, to my good P&L. Not always the easiest thing to trade, but successful in producing decent P&L and then being done for the day. Make your money, be done. So I understand that there are many people that are taking my analysis and trying to apply it. If I'm looking for a stronger decline to begin, they're looking for places to begin to short things. I do not recommend any trades, but I understand what people are doing. I totally advocate hedging, always hedging. We're in a very confusing, I'm going to say just a very strange time of in our history and on a global scale, on just a national scale. So many things going on that really should affect, that don't affect, and certain things are being played out. And we just went through an earnings season, which really wasn't all that great, but it wasn't all that bad either. So a lot of indecisive, but yet, how do we trade it? And I think that the main thing that I would say is hedge. As an options market maker, you always had maybe a biased position in terms of whether you felt direction was up or down, but you always had what we call tails. And those were up and higher and lower because nothing was guaranteed and you needed to protect yourself. All right, so within the S&P, how am I going to leave this? At least on the futures basis, under my preferred count, I think we need to look for the possibility that we're going to get additional upside. Our resistance is 44.47, 44.70, 45.04. I would think that that may contain this initial, and if I'm counting this 1, 2, 3, 4, 5, get us into that fifth wave, turn us, and then put an A above it, and turn us lower. under the alternate within this wave 2. If it's AB and we're inside this C wave, then again, we're looking for those levels, but we need to also then include the possibility we may shoot even higher. So in other words, this could be change the count a little bit. Maybe this is ending 3 of C. We get a 4th wave and then still a 5th wave in there. Bottom line is, no matter which way I'm counting it, I think we need to pull back before we go up and reaching these upper levels. Whether it's an A wave, we need to pull much stronger, further back. If it's within a C wave and it's going to be, we're finishing the 3rd of C and we get a 4th wave, it's not going to be as deep, but I would think we get back towards here and then rally again. And again, we're into these levels. All right, I'm going to go over now and show the SPX. This is where I have my alternate count. The alternate count that I'm using is one that has actually been presented previously. I don't particularly like it, so I had to recount this primary B. And where I was placing the A and the B remains basically the same. Where I put wave 1 and wave 2 for minor is where the change happens. Initially, I had put minor wave 1 up here and minor wave 2 down here. And then, of course, that would put this 4th wave into overlap, which is rule violation. And so, but I went through, went back down, looked at it, and thought, okay, this could be wave 1, this could be wave 2. Wave 4 does not overlap wave 1. It is deep, it is big, it swamps wave 2, but it fits. Because we have an ABC down, I could label it A. Or I tell you, you can do it this way. ABCX, ABC. So it could be a double ABC or just a single. And again, zigzag, 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 zigzag. So it still can be it can be a triangle, but in a wave 4, not a wave 1 or not a wave 5, just a triangle pattern. A, B, C, D, E. And what happens out of a triangle? It launches. It thrusts up and out of the triangle. And sure enough, is that not what this whole move off of that low at the end of October doing? It sure is. So what would it be then? Alternate count. The primary B wave is still in motion, as is the intermediate C wave of primary B. So what we have inside of intermediate wave C, 1, 2, 3, and this is a 4th wave. And that is what truly can be going on. And I know that I think there are some that have suggested it, that are looking at it in this fashion. Now, if that's the case, then what again we're looking for is a minor 5th wave. And we can project now as to where this minor 5th wave may go. And that is by using fib extensions. Wave 5 compares to wave 1. The first being would be, let me put it in because it's already exceeded it, so I took it off, would be equality. And equality came in at 43.34. It gapped through it. It gapped through it, which told us, oh, okay, not going to work. So that's why I did not leave it there, and I'm going to take it back off, because then we go to the next most common, and that is 1.618. And that comes in at 44.77. Now, wave 5 should take out the high of wave 3 at 46.14, I believe. 46.07, excuse me. Again, this is basis the cash market. We're now in the SPX. Being that If it got here and failed, it would be a larger fail, but then we're calling it, because this still can be considered a triangle, truncated, which means it didn't it didn't put in that high. But it would have to get up here and die and just really just flip and just truly die. No futzing around, no nothing. Now, but what it can actually, let's take it down. Let's look at our internals here. We could be just finishing up. There again, we got 1, 2, 3. This could be 1, 2. This could be the finish of 3, right? If this is 1, 2, and then we've got a 1, 2, 3, 4, 5, a 3, and then we get a 4th wave, and we get a 5th wave. We're looking that we could get ourselves at least a 44.7677, if not 47.07. So again, using Fibonacci and using the sequence, most common would be 100%. We've exceeded that. That was down here. Next up would be 1.618. Next up above that would be 2.618, and that's at 47.07. We're not going to an all-time new high, but man, we're getting close, and we already know that within that whole primary B wave, it can truly, without actually doing it, but it can retrace close to 100%, as a wave 2 can, so can a B wave. A move above the high at 48.18, which has put it into an irregular B wave. That possibility still is out there, but that one would consist of much higher levels, and I'm going to show you those levels. If we're looking at much higher, and they put it in on the wrong side. Yeah, it did. So I've got to change that so they're putting it on the downside versus the upside. So the levels, when I reverse this chart, they're coming in above 5,000. So like 51 or 5,090. So you're talking to really, this move would bring us above 5,000. I think the first is at 49.70 or somewhere in there. So I'm not really looking for that right now. I'm looking for this whole thing to complete, if indeed 5th wave under the alternate count. What's really going to tick us off that the alternate count is going to switch and be the preferred count? Unfortunately, it's going to be a break above 46.14 or 46.07. We'll get a stronger hint if it breaks above 45. That high right there, 45.41. That'll really start to tilt a little bit more in favor, but it has to be a break above there, 46.07. And then we'd be looking for another 100 points. So it's unfortunate if we're going to have to deal with this and you're trading and you're trying to put on shorts, or you're just trying to protect a position. You've got to have legs. We've got to have your outliers. And those would come in, and your tails, we call them. And that has to be above here and above here. So actually, you put it in just above that marker. Now, somebody might say, well, what is the probability? Again, reading this wave, we take it out of it being a wave 2, put it into being a wave 5, and the breadth of the market and those begin to fit more cleanly. We're not seeing them necessarily change. We see some differences coming in with the advanced decline. And again, that is just going to be that what percentage of the 500 stocks in the S&P are soaring versus what percentage are not. Same thing in the NASDAQ, same thing all across the board. The Dow, extremely powerful, but it's the Dow 30, and it has Apple and Microsoft and Intel. which have all been doing extremely well. And so those sit inside the Dow. Of course, they are also part of the S&P. So a lot of things are supporting. And you, with this move on Friday, again, which is my initial thought would be, we're going to see follow through. We're going to see upside follow through, regardless if I'm counting 1, 2, 3, a little tiny 4, and still we get follow through. So it would not surprise me that we get up to here or here. So this is all a part of the game. Okay, so just one thing I want to check is go out to that daily. I just want to take a look at what we got going on. So we've now cruised past the 50. We actually didn't break it on the way down, which would have given us the acceleration that we could have maybe expected. But it is still kind of hovering. We broke above the 100, which would flat. These are the simple moving averages on the daily. And we got a little bit of a spike. That's going to provide support. And where's that support? That support is at 40. Come on. 4402. 4402. So there, if we get our first support coming back down, and then we have additional support at this high of 4390. So even if we're going to just pull back a little bit, 4402 to 4390 may contain it before we put in another leg up. All right. Going to go over to the NASDAQ. I'm going to start with the NDX. NDX also ABC, but I'm going to tell you it's a triangle pattern for me. So even if I change this and went A, B, C, D, E, it still would be, I still could put it into a triangle. I just have to lower all of the degree. So I'm leaving it as a double ABC, but it's still, I should just change it, but I'm leaving it up as a double ABC. Putting us again, same alternate count, into a fifth wave, a minor fifth wave. Here again, 4 does not overlap wave 1. It just is much bigger than wave 2 and much more involved than wave 2, much more involved. Took longer, much wider, much bigger. But I'm not violating any rules. And I can put it in as a, if anything, not necessarily diagonal, but a contracting. In which case, what did I expect? Exactly what we're getting, a thrust up and out of that triangle. So what would we consider then for a wave? We're going to look first at what our upside potential is for this move. And 100%, we're sitting right at it. Actually, if 100% was 15,520, we got up to, this is again basis the cash, we got up to 535 on Friday. So we surpassed it. Now, come back and sitting just above it, but I still think it was broken. And it may come down back to maybe even here. But would it come all the way back down? No. So we're basically looking at it coming down to this trend line. And if it's going to just continue to pull back, maybe we get down. Come on, show me that. Maybe we get down to 15,170 and then be putting additional in. And let me just go over the moving averages. I'm here on the daily. You can see we're above everything. So I'd be looking for if it really was going to continue to move higher, folks, I'd be looking for this 20 to quickly move above the 50 and the 100. And that puts, and the 50 to move above the 100. So on the daily, they're not. So again, it throws a lot of caution. It throws a lot of caution to me. Let's look at the 4-hour chart. So if I have to take this off, which maybe will provide some support, but I'm going to take it off because it basically has been exceeded. What are we looking at? Next up, 1.618. This is again the cash market. 16,424, 425. Here we would be breaking to new highs if it were to push. And then we're into that alternate count in terms of that 16,765 is the all-time high right now. And breaking above that, if we hold below it, we'll do it at 16,423 and still put it in wave 5 and put it in a new high there. So anything above 16,000 basis the cash puts in a new high and can complete that wave. And again, primary wave B. And everything that's kind of happening, the breadth of the market, the advanced decline, the strength in the market fits within this wave pattern and the completing move of a much larger degree counter trend rally. Over in, excuse me, the futures market, I'm going to bring this down and we're going to take a look. Now here again, I just went over this before. Looking at the diagonal, the rules of the diagonal. Everything is a zigzag, 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 zigzag. Everything turned into a zigzag. Now, that fulfills one of the rules of the diagonal. The rule that wave 4 does not exceed the end of wave 2 is fulfilled. The guideline that wave 4 will, and I mean it exceeded it, folks. There's no doubt. But you can see that the triangle is truly in place. Wave 5 did what it is, one of the guidelines tells us that it should do. It breached the line, right, of 3 and 1. So, and that fit. What does a market normally do when it comes out of a triangle? Launches. Took it a minute, but it launched. Now here I am counting this as an AB. So I do believe that there's a very strong possibility that we may be finishing and I need to change the color of this. We may just be finishing minute wave 3 of minor wave C of intermediate wave 2. And so, but again, we may still, again, if I'm just counting the internals here, 3, and this is a little 4, I'd be hard pressed to kind of put it together. It would have to be, excuse me so much, where I would put this wave 1 to get the wave 4 markings, because this is so powerful. So I can't necessarily even look at the internals of this thing to find where I could mark it. So if I got 1, 2, and then 1, 2, 3, 4, 5, 1, 2, 3. I mean, if I do, it could be very, very big third wave. I'm just going to put it up there just to see. Yeah. So, and then that is where maybe this third wave, this minute third, is going to end. If I've got 1, 2, 3, 4, and then we're getting into that fifth to put the minor third. Can it end here? But it does appear that we should get and see additional upside prior to getting a little bit larger fourth wave. Again, basis the future. So what am I looking at? Well, we got the possibility that if we're looking at this count, which would be the internal of wave 3, of minute wave 3 of C, then we're kind of looking at, well, we've already got 618. The most common is 100%. That's 15,812. We've already gotten 15,600. We did that on Friday. If it goes up another 200 and then pulls back, what does that then tell us about what do we expect beyond that? Okay, so what we have then, once I get wave 4 in, I can do another to give us the wave 5 of C. So, but basically, we have 16,251. That would be the high of the C wave. So I'm not expecting that in a wave 2. That would then exceed wave 1. But I think we can get close. I think we can get very close. But I also think it's a coin toss as to where essentially we are sitting in this whole scheme of things. So I think that the strength of this market, which is truly and quite heavily confined to just a smaller group of 100 stocks. So it's within that 100 component stocks that we're seeing this. Apple being at the top of that list. Then we have Apple, we have Amazon, we have AMD, we have Google, we have Intel, Meta, Microsoft, NVIDIA. And there was a lot of play in those stocks with expiration on Friday. Now, whether that now completes a lot, and so a lot of whomever were able to get out of positions, they monetized their position, and now they're out of those positions. Will the market relax? Will the market come down? Will the market now turn and put in a fourth wave? Has the market already put in a fourth wave? And what we're doing is this going to be 1, 2, 3. This is the 4, and we're in that fifth wave. I mean, there's also that possibility. Truly, a lot of things going on. And so I can put that down here. And it does not sit really well, but it changes this. And I'll show you if I take that off, and now I'm going to put this on, and it's going to come in really bizarre. But you can see, even if this is 3 and this is the 4, 2.618, 1.618, that got taken out, right? So what's up next? 2.618, 15,706. And then we have 78.6 over here for the entire wave 2. And that's at 15,800. So we still have upside potential. It's just how is it going to be counted? And so I really am working through rules, through what could be happening, to trying to fit in, okay, market, are you now done with what you had to do for expiration? Is the market now going to start to relax? Have we reached our highs that they all wanted to see in particular stocks? Or is the money flow going to continue to push, and we're going to end up just really in the alternate count? We end up in the alternate count, we're looking much higher. We're looking much higher. Okay, so again, 100% exceeded on Friday, so I just took it off. But that would be our level. So again, when I move it back over, depends on where we are, and is it going to be the alternate, or is it going to be my preferred? Got reasons for both. Now, how do you want to play it? That is the question. But this wave was incredibly strong on Friday. It was incredibly strong. I would anticipate follow through. I really would. But is it coming as that fifth wave? Is it coming as the third wave? I don't know. So I already went over the moving averages. I'm going to complete it there. This has been a long conversation. And it's only on 2 markets and its equity. Thank you. I also really at this point want to say how much I appreciate the intelligent conversations that are brought back into this overall conversation of what these markets are doing. I appreciate every last one of you, whether you are in agreement or you're giving me an opposing view. You're inspiring me to dig deeper. You're inspiring me to look differently. And that is really what I'm looking for to do here. I really don't look at anybody as being right or wrong. I think that's like this market is difficult. And there are several ways. These are the 2 that I now have put together as best I can to reflect what I believe the markets are doing now. I'm going to wish everybody a really great trading day tomorrow. And thank you so much for listening to this today. And unless we get something really bizarre on that Globex opening, the next update will be on Monday, November the 13th.